Welcome to Rich Keys channel, where we unlock wealth one candle at a time. Here, charts don't lie and neither do we.
Disclaimer, not financial advice. The information provided on this channel is for informational and demonstration purposes only, and should not be considered as personalized financial, investment, or trading advice.
Good morning, traders. Today is the 17th of August 2025. It's about 3 a.m. New York time. And as usual, we want to look at the market charts and see what footprints have been left for us to give us an edge in the next coming week as to the next candle print on our charts. I want to start off first recapping a few things from the monthly down to the weekly, daily, 4 hours, and hourly chart. I'll show the targets for the dollar index, the invalidation point, as well as the potential risk reward on the dollar index in the next coming week. So let's get started, and let's start from the monthly frame as we have always looked at the monthly frame. This monthly chart, already we did some consolidation here for several years since 2022 down to 2024, made a high, and then down we have been coming. Prior to that, we should also recognize this swing that we did, this impulse move that we did from about 2020, right after the pandemic. The dollar was somewhere around 89, uh, right, you know, during the pandemic, and then it made its way all the way up to 110, and then pulled back down, consolidated, made a lower high, and now we're on our way. Now, I consider this way to be, if not proportionate to this move that we did from 2020 all the way up to about 112 and over. We might get a similar thing once this monthly trend line is broken. Now, I'm not sure whether we're going to break it or not, but I'm looking at the thesis that we would come below this monthly candle that we printed last month. All right, so this bullish engulfing candle that we printed last month, considering the fact that this was a bullish engulfing candle over last month candle, but we couldn't even push up by just a week is all that we were able to do the month of August, and we have been selling since. Already we've captured roughly more than 60% of that bullish candle. I don't envisage us reversing from here all the way to go up. Our monthly trend is also down, as officially now we do have our 9 period crossing down the 50, which means we've crossed down the 20, we've crossed down the 50. That gives a little bit of a stronger um, downtrend in the near months to come. So I don't think the dollar has uh, got to its floor yet. Based on that, let's push on to the weekly chart and see what the weekly did print for us as well. And looking at the weekly chart again, it's supporting the downward trend. We're still below our 20 period moving average. Um, we consolidated around the 9, which is fine because we had overstretched ourselves. From the month of June, we were way too outside um, the KC channel, with also a rejection candle, which made its way up to the 21 on the weekly chart. Now we have begun coming down again. Now, let's go down to the weekly, and then we can look at the granular level, what we think is going to be our story. But thesis wise, I think, as I said, based on the monthly, weekly, and to me as well, the daily, the dollar index would go down some more. Now, from the daily chart perspective, we have this issue. All right, so this is similar issues. If you remember, just as we are looking at the monthly, we have a similar setup here, right here, just like on the monthly, where you have a strong bullish engulfing candle over last day's candle, but then we just could not even push beyond the opening, and we have started selling. Are we going to overpower this candle? I believe we will, just like we would also do for the monthly. So what is happening here is because of this candle being bullish and this candle not able to close below this, I expect some consolidation to occur on the dollar index before breaking our target support that we came to in the previous week. So I would expect some pushback, some move between probably 97.5 and where we are, which is 97.345, some movement, and we'll probably see it on the hourly when I step down to the hourly chart. Let's quickly look at our indicators to support our thesis. Indicators wise, RSI is still below our 50 line, supporting a continuous downtrend, no strength to the upper side. Um, or to the bullish side. When I look at stochastics on the daily, yes, we've hit a stochastic low, and again, we're just trending sideways. We might be able to push stochastic somewhere maybe to the mid level by the time we finish consolidating to move down on this daily chart. So I'm not expecting the dollar index to collapse immediately when market opens Sunday night into Monday New York time. That we might do a little bit of sideways movement before coming back down. When I look at MACD, okay, so again, MACD is also showing the same thing. MACD, although we have officially uh, dashed down our zero line and our histograms are also below the zero line, we could also see that the length of the histogram bars are not increasing, which means momentum is not gathered yet. Okay, so based on this, I think again, indicator is suggesting we go sideways a bit before we go up. Let's quickly step down to the 4 hours and see what the 4 hours will tell us in the 1 hour. So when I come to the 4 hours, the story is no different. We have on 4 hours, you can see we're already consolidating. Right? So we came down, hit this low, and all these are indecision candles, sideways candles. And I think this action might continue for a little bit, even potentially pushing a little bit further up to retest the 97,530 zone, probably 97,600 zone. We could even get a push up to this level before dump of the dollar index to the downside. Indicators supporting it is that you can see on 4 hours you hit a stochastic cycle low. So this might make its way up to somewhere at least to the 50% level on stochastics before we come back down. It's usually what you observe whenever we hit a cycle low on 4 hours. We may go low for a minute, but eventually we'll start to consolidate to come up, up, up. And sometimes you may get a push up to the upper side with a strong candle, and then we start our collapse. So based on this, I don't expect us to just move up. Um, we'll probably do a little bit of sideways here, similar to what we have here. We had one here like that. Okay, so we had formed a cycle low, and then we did a sideways movement, had one strong push up to the top, and then we started selling off again. So I'm expecting a similar thing to occur, where we're going to do a sideways movement, maybe push up probably to the 21, maybe there about 97.6, and then come down on the dollar index. Going down to the hourly is suggesting the same. Um, so on the hourly, we've been falling, falling, falling. You see these absorption candles with a lot of wick at the top, a lot of wick at the bottom. That's contention. That's a battle between bulls and bears. So that's where you see the sideways movement that I'm talking about occurring. So in the early hours of market open, I expect this to continue, probably even for a couple of days is possible, but might be attempting to come down to this support zone again before we can break through. So, in conclusion, um, let's look at things from the 4 hour perspective, where everything seems quite nicely shown on the chart. Okay, so our direction or our bias is downside. Our stop loss is somewhere around um, 97.6, as I was saying. I'm not expecting a candle to open and close above 97.6. That would invalidate my analysis. If we get a candle, open and close candle above this level, that could invalidate our whole trade thesis, but if should things work out and we break this target, I'm expecting us to get to our price, which is somewhere around 97.8 to about 96. I'm sorry, 96.89 to about 96.787. This is the area of support or target I'm looking for in the dollar index in the next coming week. I want to thank you for spending your early morning hours or your day with me, listening to this Dixie analysis. Uh, Based on this analysis, Euro USD, GBP USD, all interest pairs for me that I can share as well with anyone following the trading setup that I have. I expect the dollar Euro USD to at least pull back a bit, but ultimately it's going to go up. And likewise with GBP USD, we might have an early market open push also down a bit as the dollar may be consolidating. And then after that, it will continue its journey up. So I wish everyone a profitable trade in the next coming weeks. Thanks for listening. Have a great trading week. Cheers.